Hello, YouTube and X. It's your main man, BTM, here, bringing you back to the BTM Crypto News Network. In this video, we're talking about Bitcoin. Bitcoin is down again, and retail investors are starting to panic. Is this beginning of the end for Bitcoin, or is the final shakeout before the next major bull run in 2026? In this video, we'll break down what's really going on with Bitcoin, recent price dips, why bearish indicators are flashing across the charts, and what on chain data is revealing about institutional accumulation during the pullback. While many investors are asking, is Bitcoin over? Smart money may be quietly loading up between the scenes, just like the previous bull cycle. Why is Bitcoin dropping now? The ETF inflows and institutional and behavior, market sentiment, and retail panic. So let's see what we can see. So this is let's start with the sponsor for the channel, which is Caleb and Brown. Make sure you like, share, and subscribe. I'm only doing a Bitcoin video because it's a lot of panic and people are asking questions. And I just wanted to get a video out to kind of help you guys along the way. So let me know in the comments what you guys think about Bitcoin. I don't usually do a lot of Bitcoin content, but since things are going crazy, I just wanted to get you a quick Bitcoin live. So this is the crypto brokerage. This is Caleb and Brown. Caleb and Brown is a crypto brokerage that helps you find cryptos to invest in and gives you a one-on-one broker alongside with a personal place to hold your crypto. You don't have to worry about passwords or key phrases. They do help self custody your crypto. So let me know what you guys think about is Bitcoin over in the comments. And as always, it's your main man BTM here. Don't forget to like, share, and subscribe and super chat. So this is the crypto bubbles. Currently, Bitcoin is down 0.2 on the day, up 0.8 on the hour, down 7.2 on the week, down 28.2 on the month, and down 29.4 on the year. It is at 68,455. And people are saying it might go down. Michael Saylor says he'd take it all the way down to 8K. So let me know in the comments. Bitenter is up 7% on the day. Cosmos Atoms up 5.2. XNO is up 1.8. Radian's up 0.6. Cardano's up 1.6. Prime is up 5.2. Bitcoin SV is up 3.1 on the day. Binance is up 1.1. Bitcoin Cash is up 2.3 on the day. Render's up 2.4. Safe is up 2%. Cubic is up 3.3. Ethereum Classic is up 1.2. Jasmine's up 1.8. Dash is up 2.1. Satoshi is up 2.2, which is the pennies to Bitcoin. For the hour, it's up 0.1. For the week, it's up 2.2. For the month, it is down 38.2. And for the year, it is down 90.2%. Not financial advice, but now is a good time to get in. Quant is down 0.3. Nero's down 2.6. Ingest is, or up 2.6. Ingest is up 1.1. Casper is up 3.9. Dash is up 2.2. Ondo's up 0.5. Theta is up 0.7. Alchemy Pay is up 0.5. Pith is up 1.3. Strongholds down 4.1. Nexo is up 8.5. Link is up 1.9. Hash Flow is up 4.8. Gala is up 1.6. Filecoin is up 1.9. OKB is up 2.3. Osmosis is down up 1.5. XPR is up 0.6 and Ethereum is up 1.8. So this is the article. MicroStrategies claim it can survive Bitcoin crash to 8K, 8,000. Ladies and gentlemen, boys and girls, cats and dogs. There seems to be a no stop in MicroStrategies Bitcoin shopping. Every week there's at least one purchase. In fact, at press, MicroStrategy, now better known as Strategies, has 714,000 Bitcoins in coffers. That is 3.4% of the total 21 million Bitcoin supply. So the question is, why would MicroStrategies keep investing in Bitcoin if Bitcoin is over? And like I said previously, now would be a good time to buy. These guys are saying it could run back up, but let me know what you guys think in the comments. Don't forget to like, share, and subscribe. During the fourth quarter earnings call, the company addressed the ongoing cryptocurrency market downtrend. At the time, Bitcoin price had crashed down to new lows. Crypto-heavy companies like Strategy could see the valuation of their assets drop below their purchase rates. CEO Fong assured that current market situation will not threat to the company. The real risk was a potential scenario in which Bitcoin fell to below 8,000. Just 11 days after the comment we made, Strategy assured there's no risk at all. MicroStrategy's balance sheet problem. Last year was all about Strategy's balance sheet. In 2026, MSCI proposed to exclude companies with more than 50% of the balance sheet filled with digital assets from indices. One of the first companies that faced the risk exclusion was Strategies. In January 2026, Strategy finally breathed a sigh of relief after MSCI decided to temporarily skip deciding on the matter. MicroStrategies boasts self-sufficiency. In the post on February 15th, which is yesterday, Strategy defend the balance sheet. Strategy can withhold a down draw in Bitcoin price to 8K and still have sufficient assets to cover its debt. The post also showed a geographical representation of the Bitcoin reserves. At current levels, Bitcoin price around 69,000. Strategy Bitcoin reserves are valued at approximately 49.3 billion, while the net debt stands around 6 billion. This means companies holding Bitcoin are worth more than 8 times its debt. There was also a graph from extreme downside scenario. When the Bitcoin price drops 88% to 69K to 8K, in the situation, the value Strategies Bitcoin reserves could fall roughly to 6 billion. This would effectively match its 6 billion in debt. Converts are fully covered even after 88% Bitcoin price decline. This would result in a 1x coverage ratio, meaning that even after such a dramatic crash, the company's Bitcoin holding would theoretically still be enough to repay all outstanding debts. Beyond raw numbers, strategy also emphasized the structure of its debts. Its convertible notes have staggered maturities and put dates between 2027 and 2032, which reduces short term financial pressure. This means the company does not face immediate repayment demands or forced liquidity risk in the near term. However, strategy states its plans to gradually convert existing convertible debt into equity rather than issue additional senior debt. This is the article. U.S. crypto coin adding 16% in less than Elon Musk feels surprise speculation of the 2027 Bitcoin price. Boom. The Bitcoin price is still down 50% since hitting the all-time high of 126,000 per Bitcoin last October, with fears swirling surprise a Federal Reserve flip could be about to send Bitcoin price even lower. Now, as wild rumors drive the Bitcoin price to bounce, U.S. Treasury Secretary Scott has a very important that the crypto market structure bill known as the Clarity Act is passed, predicting that this will help Bitcoin in the crypto recovery. The Trump approval rating down 4 points. Wait, these are another articles. I think on the Clarity bill would be great comfort to the market. We could move forward from there. Besant told CNBC it's very important to get this done. Lawmakers have far failed to find bipartisanship agreement on the Clarity Act, with how stablecoin paid interest yields to users and whether provisions should be included to address the U.S. President Trump's crypto conflict of interest emerging as a sticking point. The Clarity Act, designed to create a rule book on how Bitcoin and crypto markets will operate, had looked close to find a path to Trump's desk last month. However, we're checking the sound real quick. However, crypto exchange Coinbase pulled its support at the last minute, adding to the Bitcoin price in the crypto market volatility. So let me know what you guys think. Do you think the end is near for Bitcoin? And let me double check something. What's going on, guys? What up, Tony T? What up, Silver Days? What up, Tony? What up, Dave? What's good, bro? Dave, let's freaking go. The ZBCN dip was good. What up, Silver? Let's freaking go. And Tony, is anyone buy the ZBCN dip today? And yes, I constantly buy the dipped for Bitcoin and the dipped on ZBCN and XRP. Because, like I was previously stating, at some point, maybe not this year, probably next year, or maybe towards the end of this year, the Bitcoin price will come back, guys. Just be patient. Currently, we're waiting for the Clarity Act to be passed. And I think that's the main catalyst that's holding Bitcoin down. Once the Clarity Act is passed, Bitcoin will start to pump again. So don't panic, don't sell, don't get crazy. Just be patient. As Warren Buffett said, wealth transfers from the patient from the impatient to the patient. So basically, the people that have been patiently investing are the ones that will reap the benefits. So let's keep it moving. Bitcoin has a history of volatile movements, but part of the volatility here is self induced. There's a group of Democrats who want to work with Republicans on getting a market structure bill. It's called the Clarity Bill, but there's a group of crypto firms who have been blocking it. Chances of the Crypto Act being signed into law this year has climbed since Coinbase torpedoed the bill. Now stand just under 60% on the poly market prediction performance. In Bitcoin's price plummet, ETFs are down, but are still signaling crypto winter investor panic. The Bitcoin price has crashed and stoked fears of another crypto winter and has shaking faith in the trade that many would rival gold as a store of value and remain bullish during the crypto friendly Trump administration. While spot Bitcoin ETFs have declined by billions of dollars in recent months, net inflows from investors remain high over the past year period. And the ETF experts say they could suggest investors are trimming exposure, especially hedge funds and speculators, rather than long term investors abandoning the asset class. So, this is a quick video we'll play. So, let's see what this guy has to say.
Sell off. Assets are down, but most of that is price appreciation. Right? Bitcoin is down more than 50% from its October 2025 peak. We've seen a handful of outflows, maybe $7 billion, but the vast majority of ETF investors show they're here for the long haul. The people who have been selling are mostly sort of OG, the original crypto investors. Remember, they own most of the asset. They've been accumulating it over 15 years, and they've been trimming their positions a little bit, not en masse, but a little bit. And that's what's been driving this pullback.
Now, Will, roughly 40% of the spot Bitcoin ETF holders are underwater right now. They need Bitcoin to go up roughly 50% in order to make themselves whole. How are you, working with some of your customers? Like, what is the general sentiment right now with respect to how the ETFs are trading? Is it just, are they people hanging in there to break even, exiting those positions?
I think that there's a lot of negative sentiment out there, and actually probably the most negative that I've seen in quite some time. And it's tough. It's tough to be a Bitcoin investor or a crypto investor right now when you look at the price of gold going through $5,000 an ounce, other assets appreciating to all-time highs. And I think the precious metals thing has really caught crypto investors sort of off guard. This is not supposed to happen. Gold's not supposed to go to all-time highs, and crypto sort of doesn't react like this. And so I think for a lot of people, the sentiment is negative, and therefore we've seen that manifested in online, etc.
Yeah, we've certainly seen this break in the digital gold thesis for Bitcoin the last few weeks as gold surges to all-time highs. Another dynamic that I'm trying to square: why do we almost never see dip buying in the ETFs? It almost always tracks the price of Bitcoin or Ethereum. Rarely do we see ETF flows break momentum in the markets. Walk me through this, Matt.
Sure. Yeah, I think there are two aspects going on. You actually do see, if you look close enough at the flows, you can see that some of the providers like Bitwise, which serve primarily financial advisors, do get inflows that are counter trend. We had significant inflows across the suite of all of our products last week because our
So, as you mentioned, they are still buying the ETFs. They're pulling away because a lot of people are buying precious metals like gold and silver, but these are asset classes that I'm sure are going to translate back over to crypto at some point, because we know that crypto is bringing these asset classes on the blockchain, and they will be using these as investment leverage. I've talked to several people that are saying that they will start using gold and silver as a investment on Bitcoin, where they can leverage precious metals on the blockchain. And if this happens, they will start with the top, which would be Bitcoin. So people would leverage their precious metals to purchase Bitcoin. And as the precious metals goes up, they will also hold that parallel with Bitcoin. That is one of the catalysts. And also, I think we'll look at Twitter in a second. And there is some things brewing on Twitter as well. Let's finish this video real quick, though.
Financial advisor investors were buying the dip. What covers it over is that ETFs serve a wide variety of audiences. So often when you see those outflows, those are coming from hedge funds or traders who are also participating in the ETF. So it's really a tale of two sides. When I speak to financial advisors, they are looking at this more as an opportunity than a risk. Again, we continue to see inflows across the full suite of our products at Bitwise. And I think that's reflective of these sort of two markets, the fast money market who are investing for the next month and the people who are investing for the next 4 or 5 years.
Part of the thesis in speaking to analysts was the fact that these spot ETFs, these spot crypto ETFs over the last 2 years really helped put a floor under the price of Bitcoin. But it seems as though in the last 6 months, they're not providing that same support. And obviously we can see overall fund flows, and to your point, Matt, that can kind of cover up who's buying and who's selling. But are there any pieces of information that you're waiting to see in those 13 Fs, any specific hedge fund moves that might explain the market action we've seen? I put that to either one of you.
Yeah, I'm happy to jump in there. There's certainly a lot of chatter about whether we'll see hedge funds that built big positions at the end of Q4 who maybe have wanted to unwind those positions early this month. But of course, the 13F data is significantly delayed. I think there's aspects of all of it. What I would point to again is I do think there are long-term investors. I think the ETF flows have buoyed the price. If this is a full-blown crypto winner, similar to 2018 or 2022, in those crypto winners, Bitcoin retraced 77 to 85%. Again, we're down about 50, 52% now. That delta may be explained because the ETF investors were buoying the price. I know it's still down substantially, but it's less compared to previous bear markets. And I think if we stabilize here, we would note that the ETFs were in fact that stabilizing force, just not enough to keep the price at all-time highs at all times.
Now, Will, let's talk about the wider ETF book that you have, because part of the narrative that I hear from analysts is that this depressed crypto trade might have to do with the fact that interest is migrating to prediction markets and zero-day options. And you also represent ETFs that look to get investors a wider set of exposure to the AI trade. Talk to me about where you're potentially seeing customers move their funds.
Yeah, that's right. So I think that there's never been as many ETFs available as there are in the market today, and therefore there never been as many investment options for people to choose from. And so crypto does have all sorts of competition from different asset classes and different ETF ideas. One of the big ones at the moment is what I call the retailization of institutional strategies. So particularly using options, for example, to generate yield. So we have the series of products in our Yield Boost family, and they can do different things from generating high amounts of yield to providing downside protection and other strategies which previously were only really available to institutional investors. And that's something that's happening not just for regular stocks and bonds, but with crypto as well, where people can now trade options on crypto ETFs, et cetera, packaged through the ETF wrapper.
And that's something that I've wondered. Initially, straight out the gate, we saw a lot of these ETF applications focus on the price of the spot price of these different crypto tokens. And then it moved into having ETFs tied to the derivatives markets, and then leveraged bets, and then combining different tokens into the same, or wrapped by the same ETF. Where's the most interest right now with respect to what investors want to get exposure to? Has it moved beyond wanting an ETF tied to the spot price of Bitcoin, for example?
I think it's a little bit like the ETF industry as a whole. The majority of the interest will still be in the spot Bitcoin or the core products, but increasingly people will want different ways, different adjacencies to play that, whether they're yield seeking, whether they want downside protection, whether they want diversification, blending crypto with other assets. So it's a little bit like the ETF industry itself, where the vast majority of assets will be concentrated in the biggest core index funds. But increasingly, people are really interested in active strategies and leverage and options and other things, at the satellite.
Matt, same question to you, but from the Bitwise lens, where are you seeing the most investor interest in terms of your products?
Yeah, I'd agree with Will that there is interest in these sort of derivative adjacent products. We run our own suite of option income producing ETFs, writing against crypto stocks, et cetera. I think the next major wave of crypto interest is actually going to be diversified index funds. If you look at things like equities or bonds, as Will mentioned, the vast majority of assets are in diversified index funds. An unusual thing about crypto is most are in single asset products like Bitcoin ETFs or Ethereum ETFs. We have the first crypto index fund and largest crypto index ETF, BITW. I think you're going to see a lot of investors migrate to that as crypto just becomes a normal part of the asset market, right? We use indexes in stocks, in bonds, in real estate, in much of commodities. I think we're going to use it in crypto as well. So we're seeing interest on that side too.
Quick question just about the staked Ether ETFs. That seemed as though it was this huge threshold that was crossed when the SEC finally made that possible to be able to earn that yield on your Ethereum in the context of an ETF wrapped product, something that you couldn't do when they initially launched. But I feel as though that hasn't shown up in flows. You haven't seen more investment in the Ether ETF since that was made possible. But am I missing something? Are you seeing more investor interest from your customer base? I put that out to either one of you.
Yeah, sure. I'll take it first. Will can follow up. We're seeing interest on the Solana side. So our Solana staking ETF, BSOL, has had strong inflows since it launched. Solana has a higher staking yield than ETH, about 7% versus 2%. So it's a more meaningful differentiation. I think the thing about Ethereum and staking is, of course, it's great to have your Ethereum ETF stake. It's great to earn an extra 1 or 2% a year, but people are investing for the base return of Ethereum, right? Plus 100% or down 50%. That's going to overwhelm sort of the staking component. So again, more on Solana where the staking yield is bigger. Ethereum, it's a benefit to be sure, and we're fans of staking. We run a big staking business, but it's more of a marginal difference because it's only a couple of percentage points.
I think regarding the flows, it's maybe too early to read too much into the tea leaves of the flows around these specific products at the moment, because there's been a massive drawdown, in Bitcoin, Ethereum, and other coins, and therefore, from a inflows perspective, it's probably time to take a longer view, because it's just not a momentum traded market at the moment, which I think a lot of buyers in the space are looking for that recovery to get back in.
Thinking ahead to the next catalyst, Morgan Stanley was a first mover almost 18 months ago, having cleared its army of 15,000 FAs to pitch some of these spot Bitcoin ETFs. They've since filed to launch their own. Is this what we need? More FAs cleared at more banks to start pitching these products in order to open the floodgates to more customers? Is it the banks themselves becoming the issuers? Matt, I'm sure you have specific thoughts on that, being an issuer yourself.
Yeah, I think it's all good. All of these doors opening up are good things, right? All 4 major wirehouses across Morgan Stanley, Merrill Lynch, Wells Fargo, and UBS now allow exposure to certain versions of crypto products. That's going to be helpful for flows. But in a crypto winter, there usually is no one major catalyst that excites a V-shaped rally. Usually it's a slow bottoming, and the things you mentioned are what builds momentum into the future. If we're looking for a specific catalyst, maybe if the Clarity Act passes in Congress, that will add some bullish momentum. But usually these bear markets sort of die in exhaustion, not in excitement. I would expect it to sort of bottom out slowly. And then things like Morgan Stanley going all in on Bitcoin will be part of what accelerates us when we're on the upside.
I was looking at some of the data, and it shows that outflows are just shy of 200 million, despite the heavy price pressure. And that flow deceleration does historically signal a potential inflection point. How are you reading this, Will?
I think Matt put it quite well, which is that if you look at the ETF flows, it's not really clear that ETF customers are the ones that are giving up on Bitcoin or other cryptos at the moment, the selling has been pretty light compared to the total assets out there. I think this is much more a case that the kind of buyer that's buying Bitcoin and other ETFs on the crypto side is more institutional, more financial advisor based. The amount they hold in the portfolio is probably very small, and therefore, they perhaps can weather the volatility, or at least are comfortable with this kind of activity because they're holding for the long run.
Okay, last question for you both. You're both ETF industry veterans, so let's zoom out and consider the industry as a whole now. What do you see as the next big opportunity for the growth of ETFs in 2026? It doesn't just have to be crypto related, Matt. Is it this or something else entirely? Will, kick us off.
I think the big trend in ETFs is the one that's been alive for the last couple of years, which is this sort of retailization of institutional strategies. So strategies that were very big, but maybe just accessible to high net worth clients through financial advisors or others, now passing their way into the ETF wrapper. So those could be strategies using leverage, options to generate yield, options to help protect against downside movements. All of these different types of strategies are becoming much more popular as retail investors want access to the kind of strategies that they couldn't get before.
Matt, final word.
I actually absolutely agree with Will. That is the direction of travel. Of course, the vast majority of flows will still be into VOO and the plain vanilla exposures that we all know and love in ETF land. But ETFs are about making institutional strategies available to everyone. I think Will mentioned many of them. I also think you'll see more private shares in ETFs. I'm bullish on that trend as well. So everything that family offices and institutions have been doing for the last 20 years, ETFs are going to crack that open for everyday investors. That's been a great story for ETFs for 30 years. It'll be a good story for the next 10.
So shout out to CNBC for this article. Bitcoin's massive slump for a record price above 126K last October has darkened sentiment across the crypto landscape. Faith has been shaken in trade, and that was viewed as a digital rival to gold and the store of value, but some others as a risk on asset that would continue to boom alongside crypto friendly Trump administration. Since the all time high price in last October, Bitcoin has almost lost half of its value, and its inability to bounce back in trading is increasing fears about another crypto winter, a prolonged slump similar to the time of the FTX crash in 2022 when Bitcoin fell to near 50,000 to a low as 15,000. In the past month alone, Bitcoin has dropped over 25%. But crypto investing experts on the latest CNBC EFT Edge said a look at the recent flows into and out of Bitcoin and crypto exchange trade funds suggests that long-term investors are not abandoning the asset class. Money has certainly moved out, but they say not to level. This suggests long-term investor panic, but they say not to a level that suggests. Over the past 3 months, the iShares Bitcoin Trust has been approximately 2.8 billion net outflows. That is substantial, but over the past year, the BlackRock ETF has attracted 21 billion in net inflows. According to VitaFi, the broader spot Bitcoin ETF category shows similar patterns. Over the past 3 months, the ETF class has experienced roughly 5.8 billion of net outflows. Over the past year, across spot Bitcoin ETFs, and net inflows remain positive by 14.2 billion. Money is exiting, but the majority of assets have remained in place. Some of the ETF experts say that the money is being pulled isn't from long-term investors or financial advisors that have begun allocating to the class. It's not the ETF investors who are driving the sell-off, said Matt, Bitcoin asset manager CIO on ETF Edge. She says much of the broader pressure in Bitcoin may come from crypto investors who accumulated positions over years and are now trimming exposure. It's really a tale of two sides, Hogan said. He said there are hedge funds and short-term traders who use most liquid ETF tools and may pull capital quickly when momentum turns negative. At CNBC Digital Forum last week, Galaxy CEO Mike said crypto markets era of speculation may be ending and returns going forward will be long-term investment holders. It's going to be real world asset with much lower returns, he said at the CNBC event in New York City last Tuesday. Retail people don't get into crypto because they want to make 11% annualized. She said they get in because they want to make 30 to 1, 30 to 1 or 8 to 1 or 10 to 1. Financial investor at Wall Street banks are among those adding Bitcoin to investment portfolios and adding their own branded crypto ETFs, and longer horizon investors could hold as a small allocation within diversified portfolios, may be willing to ride out volatility, Hogan said. If investors were compulating across the board, the outflows over the past 3 months would likely approach the scale of the prior 12 months inflows. So basically, he says they're not pulling out as much to bring it all the way down as suspected, but they are coming back up. So this is big intent swap alert. 529,000 USD Ethereum to 8.5 Bitcoin. Transaction linked to Explorer near intents. Basically, Ethereum USDC to Bitcoin 7.5. Interesting. So it looks like they are swapping. A lot of closed doors meetings for the Clarity Acts happening almost every other week. You can sense what's coming. Yes, we are close to the pass of the Clarity Act. The White House new crypto meeting this week on Clarity. Digital Commerce publishes their version of it. Another closed door meeting at the White House could happen as soon as this week, stated the White House crypto advisor, as negotiations over Clarity hit critical state. Last week's meeting between the senior bank officials and crypto lenders ended without a deal after banks circulated a document titled Yield and Interest Prohibition Principles. In response, Digital Commerce representative over 130 crypto firms published their own principles Friday, pushing back. The principles push to preserve stablecoin as payments instruments, protect DeFi liquidity and dollar dominance. As the president's day, we're not working today. Keep an eye on tomorrow's update. So let me know what you guys think. Let me see what happened here. Dang it. So going back to X. What was that? It was this guy. Bitcoin whales accumulate as price dips below 60K. On-chain data shows a major accumulation trend from large holders addressing 1K to 10K. Bitcoin added 10,269 coins in just 24 hours on July 17th. This purchase worth over 600 million marks the largest single day inflows for the cohort since late June, and buying occurred as the price Bitcoin traded below the 60,000 level. Smart money's buying the dip while retail panic sells. Classic. So, what do you guys think? Do you think it's over for Bitcoin, or do you think it is starting to accumulate for that next leg up? Strategy says it could withstand Bitcoin dropping to 8K. Key numbers: 117,000 Bitcoin held 3.4% of the total supply, 6 billion in convertible debt, Bitcoin coverage ratio 8.3x. Average accumulation cost 76K. Current price is 69. 10% unrealized lost. Plan to gradually convert debt to equity over 3 to 6 years to reduce liquidity pressure. The risk isn't just the down draw, it's how long volatility lasts. So, as mentioned, I think it's going to pop back. And Steak and Shake just said sales are rising dramatically due to Bitcoin payments. Soon, every restaurant will accept Bitcoin as payment. This is just the beginning. So, shout out to Steak and Shake, because I actually used Bitcoin at Steak and Shake. It's actually pretty cool, but it's only a matter of time before this adopted across the rest of the Steak and Shake restaurants. New strategic Bitcoin reserve bill just got introduced in Congress. The bill will allow taxes to be paid in Bitcoin at a 0% capital gain tax. This is huge, and this is huge. They're letting you pay your taxes with Bitcoin. Hold up. Wait a minute. Let me see. Moves over here. See if we can run this video real quick.
Congressman Davidson joins me now. Congressman, a series of questions here. Number one, what is a Bitcoin reserve? What does it do? And how do you build it?
Well, first of all, the president created a strategic reserve of Bitcoin in part because the United States government didn't have like a single custodian. You had every agency in the government that might have had an asset, seized an asset, or anything else, any kind of digital asset. They didn't have.
Just trying to make sure that the sound is up. For some reason the sound's down.
Private keys. So essentially, when you lose your keys, it's like losing a pile of cash.
Yeah.
So they created an organized way and put it under Treasury to say, hey, we're going to have a single custodian for all of the Bitcoin, kind of like Fort Knox for crypto, right? Okay. And then they said, well, not all crypto is created equally. Bitcoin, we want to hold on to. It's an appreciating asset over a long period of time. Some of these other things, we should just sell them off and buy more Bitcoin. But they wanted to do it in a deficit neutral way. And I think a lot of people have been like, well, order. So there's a common sense way to have custody for the Bitcoin and other digital assets, but you can contribute. So when you pay your taxes, you can pay your taxes in Bitcoin. So Bitcoin is currency in that sense, and there's no capital gains.
Bitcoin reserve. Congressman Davidson joins me now.
So I don't know what happened to the sound on that guy. I don't know if the sound is not there
What does it do?
or what,
And how do you build
because
it?
it was working fine.
Well, first of all, the president created a strategic reserve of Bitcoin in part because the United States government didn't have like a single custodian. You had every agency in the government that might have had an asset, seized an asset, or anything else, any kind of digital asset. They didn't have custody of it, so they were losing track of the private keys. So essentially, when you lose your keys, it's like losing a pile of cash.
Yeah.
So they created an organized way and put it under Treasury to say, hey, we're going to have a single custodian for all of the Bitcoin. kind of like Fort Knox for crypto, right? And then they said, well, not all crypto is created equally. Bitcoin, we want to hold on to. It's an appreciating asset over a long period of time. Some of these other things, we should just sell them off and buy more Bitcoin. But they wanted to do it in a deficit neutral way. And I think a lot of people have been like, well, how else do you put money in there? And so we're introducing legislation that not only codifies that executive order, so there's a common sense way to have custody for the Bitcoin and other digital assets, but you can contribute. So when you pay your taxes, you can pay your taxes in Bitcoin. So Bitcoin is currency in that sense, and there's no capital gains.
Bitcoin reserve. Congressman Davidson.
Okay, so Bitcoin isn't hype, it's architecture, blockchain, immutable, trustless, cryptographic, open source, independent network. This is Bitcoin waste energy. In Finland, Bitcoin mining is actually replacing oil and gas heating. I investigated these secretive projects and I was amazed. Not only do miners warm the snowy towns, but they also balance the grid.
Explain how, why, and everything in between. But first, let's go inside and warm up. It is so cold.
I travelled to the Arctic Circle to visit the energy companies experimenting with a strange energy hack. These companies provide heat to homes, supermarkets, warehouses, and entire towns with these small, dumb machines. It's all thanks to... In fact, I'm not going to tell you straight away as it's controversial and misunderstood. Sorry. Bear with me. But first, let's address a couple of things. Most people think this technology wastes energy, or that it uses coal and gas and it literally boils the oceans, or, and this is my favorite, that it is going to use up all of the world's energy by 2020. Yeah, I know. Firstly, very briefly, the machines look like this, this, or this, and all they do is this.
So there's chip which runs the calculation and therefore gets hot.
That's Yanis from Power Mining. He's an expert in computer heat transfer.
Exchanging all its electrical power into heat.
And all these computers do is guess a really big number.
Many people say that it's the dumbest computer in the world because it can only do one algorithm.
So it's just guessing stuff.
Just guessing numbers.
If they guess the right number, they win a reward, which is worth about $300,000 plus something extra. A dumb machine which can get hot and is supposed to make money. All right, enough games. What is this dumb machine? It's loud, it's hot, and it secures a $1 trillion network. It is the single most debated piece of technology on the planet, and usually the media hates it.
That is a Bitcoin miner.
That is, yes.
Yep, you heard that right. Coming up, we will see firsthand how Bitcoin heats entire towns. I'll get a little too close to the Russian border, where cathedral-like warehouses are kept warm with Bitcoin, and we'll ask the Finns what they think. But first, my name is Joe Nakamoto, and I have documented Bitcoin mines in rural Kenya, Northern Ireland, and London. I exposed crypto scams in Hong Kong, tried to stop the German parliament from selling all of its Bitcoin, and I did a Bitcoin transaction on Machu Picchu. Hit subscribe to join me for real-world Bitcoin investigations.
Before we get to the Arctic Circle, though, we need to understand this heat container tech in Latvia.
So the focus here is not the hash rate,
right,
which is nice to have and good to have, but it's actually the heat.
So the Bitcoin miner is a boiler.
It is. It actually is.
Right, okay.
Just a very advanced one. Joe, are you well insured? This is completely safe. I guarantee. Here now is a dry cooler. Interesting thing is, in most Bitcoin mines where they use hydro cooling technology, this is the main cooling source. In our case, this is just a backup. This is just when the city doesn't need the heat at the scale that it's producing the heat.
So it's like letting the steam go off into the air.
Yeah, exactly.
This is like the on top of the kettle. You know, you let the lid off and all the steam escapes.
Precisely.
Interestingly, Bitcoin mining for heat is already secretly taking place across Europe.
We heat cities, we heat warehouses, we dry mangoes, or we can also warm some pools up with it. Greenhouses, for example.
Say what? What is this? Using Bitcoin to heat? I actually talked to a couple of guys in Florida that said they were trying to create. Actually, I didn't think about that. A way to heat the pool with Bitcoin, right? With the Bitcoin miner to heat their pools instead of using a regular heating system. And with the miner doing it, you actually earn something in the heating process. I don't know how efficient that is, but it definitely gets hot from mining and being around mining and Ethereum mining for years. I can guarantee it definitely produces a lot of heat. And if you have a way to target that heat, I think they might be onto something.
That is already being done. Like actually a large portion of European fruits and vegetables that come from Holland are heated by Bitcoin.
Right.
That is already happening, just people don't know it.
I tried to search on BTC Map, a wonderful registry of Bitcoin merchants around the world that you should definitely check out. So please download BTC Map on the app or Play Store. But for my old job as a Bitcoin reporter, I actually covered a warehouse in Norway and one in the Netherlands that use Bitcoin miner heat for both tulips and to dry timber. I sat down to interview Yanis in the snow. But what the bloody hell is that? So the power mining team loves, well, power.
Yanis, what does this have to do with Bitcoin mining? Nothing, right?
Yeah. Let's go.
All right. Loads of fun driving through the forest, but totally unrelated to Bitcoin. Now it's time to see those miners where they're really needed. So I flew to Saylor, Finland, a town where they are already putting the miners to work.
I've arrived in Seinäjoki and it is freezing, absolutely freezing. No wonder they need central heating here.
Central district heating, aka heat networks, is pretty normal in the Baltics. Yanis told us it's common, and in Seinäjoki, all the heat to survive the winter comes from a centralized location. Any guesses where I'm headed next?
Now, Seinäjoki is probably the most northern town I've ever been to on continental Europe. We are very, very north. It's 10 o'clock right now, and the sun is only just coming up. To give you an idea of how cold it is, that's ice. It's -6 today, which is apparently a bit warmer than it has been recently. So we're going to go to Seinäjoki's district heating center, where apparently they are using Bitcoin miner heat to heat homes. Okay. Oh, look, there's a heater behind me. So this is one of the air cooling systems, no?
Yes. So I'm Mikko from Minersloop. I'm one part owner of this company also. Basically, I do all the technical stuff here.
Now, there are 3 ways to distribute Bitcoin miner heat, but serious setups use 2, water and oil.
This is also with water. Then there is this, almost 1 megawatt with oil.
Now this is an immersion rig.
Basic immersion setup.
Regular hydro miners use water pipes to cool down just the chips. But here, they just dunk the whole machine in a special non-conductive oil. It's like a thermal bath, meaning the efficiency is around 99%.
You can touch it, but...
You can touch it?
Yeah. But after a week, you have still it in your finger. You can try to wash it off, but it doesn't wash off.
I feel like I'm in the Matrix right now. Like I'm Neo and I'm about to wake up.
All right, let's explain this setup local news reporter style.
On either side of me, you have these Bitcoin mines sat in oil. And this oil is then gets really, really hot because all these Bitcoin mines basically dump their heat into the oil, which then gets passed through a heat exchange before being sent into town. The temperature is about 55, 60 degrees, which by the time it gets to people's homes, it could be 45, could be 50 degrees, which is ample for heating radiators, for taking a shower, for taking a bath, you know, hot water generally, which homes need. But then on the other side of this plant, you have these heat pumps take it up to 90 degrees. 90 degrees ensures that no matter where you are in the town, the temperature of the water or the temperature of that liquid reaching the towns is going to be at least 60 degrees, which is, of course, ample. We don't need much more than 60 degrees. These are the batteries that they keep stored up with electricity in the event that there are fluctuations or changes in how much they need to mine.
Use actually in the old Tesla's batteries.
These are old Tesla batteries?
Yeah.
To the environmentalists, I just don't know what the counter-argument for this is.
Some critics claim that Bitcoin mining boils the oceans, but look at this report. Finland's electricity is almost 90% fossil-free. It runs almost entirely on a mix of renewables and nuclear. So these miners aren't plugging into coal plants. They are running on some of the cleanest power on Earth.
If the source is renewable, we buy it and we make something out of it that is not burning or doing any pollution. I think that's like more than a good for our environment.
So the guys behind me are heating Seinäjoki with Bitcoin mining, and yet the townspeople don't know about it at all, which is kind of amazing when you think about it. The question is though, do random people, do they know that there is Bitcoin being mined here to warm their shopping centers? So I'm going to go there and ask some people in a second. Hello, hello, hello. Can I ask you a quick question? No? Hello, hello. No, no English. Hello, hello, hello. No, hello, hello. Hi, hello. No, no, no. Okay. Do you speak English? No? Well, you just replied to my question though.
It is very hard to do citizen journalism in Finland, as culturally, Finns just do not talk to strangers.
This is probably the coldest place I've ever done this. Have you been to the supermarket before?
Yes.
You have? Amazing.
Yes.
And do you know where it gets its heat from to keep the supermarket warm?
Oh, I don't know. Not sure.
Steam.
Actually, no.
Could it be gas?
So it actually comes from Bitcoin mining. There is a Bitcoin mining center very near here where they mine Bitcoin and then they pump the heat from those mines into the supermarket.
Expandable.
Wonderful.
Yeah.
Awesome. Right?
Interesting, yes.
Did you have a positive or a negative opinion of Bitcoin mining?
It's positive. I think it's positive.
Neutral.
After 2 hours of standing outside a supermarket with a clipboard, I spoke to a whopping 11 Finns.
Overall, I'd say the Finnish are pretty neutral on Bitcoin and Bitcoin mining. Also, no one knew where the heat came from generally. So I guess people don't really think about that much on a day-to-day basis.
By the way, if you're still watching, you might be interested in Bitcoin. If so, I have some freebies to give away. Firstly, a guide to Bitcoin self-custody brought to you by Casa. Scan this QR code for a free guide from Casa, a Bitcoin security company, to learn about self-custody and Bitcoin. Thank you, Casa. I'm a customer and user of their excellent product. Now, if you want some free Bitcoin, then scan this quickly. BitKit are giving away 21 people free Bitcoin for using their Bitcoin wallet. Thanks, BitKit. Now, back in Finland, heating homes is one thing, but out east, near the Russian border, the cold is brutal and the energy needs are higher. I drove out there to see how they're using this tech for heavy industrial heating.
So the last Bitcoin mine we visited was all about heat for towns and for residential use. But here, I'm in the middle of nowhere, in a great big industrial plant, and they need the Bitcoin miner heat to keep these huge warehouses warm over winter. Well, not just warm, like at a reasonable temperature. And the importance of Bitcoin miner heat for industrial uses is something I'd never really thought about, but clearly in Finland, you need it where your fingers fall off after 10 minutes outside. We're just scratching the surface for how many different ways Bitcoin mining can really impact the world and impact the workplace too.
I'm doing a deep dive into this Bitcoin mine on the Russian border on my channel soon, so please subscribe for that. The man who showed me around explained to me something off camera that I can share with you now.
Bitcoin miners are playing this increasingly important role in stabilizing the grid.
But what does this mean? Well, Yanis actually brought this up with me in Latvia. Bitcoin mining actually has 3 primary use cases, and it's not just Bitcoin and heat.
You have at least 3 revenue streams. Bitcoin mining, selling the heat, as well as balancing the energy market.
Yeah, that last one is grid balancing.
So basically, you've got this huge build out of renewable energies in Finland. On a day like today, when the wind is howling, you'll get like an absurd amount of energy being generated. So the price falls to effectively zero. A great day to mine Bitcoin. But say there's a disaster at one of those power generation plants, or say the wind suddenly stops blowing. The Finnish grid will then tell these Bitcoin miners to stop mining and to turn off. It's called curtailment. And these Bitcoin miners can immediately shut off.
We are so flexible. We can shut everything down in seconds.
When there is too much energy being generated, Bitcoin miners can come in and help to drive the price down for the rest of the country. And inversely, when there is a huge spike in demand, say at 5 o'clock in the evening, when everyone comes home from work, or when, I don't know, the temperature plummets and people really need to boost their electricity draw, then Bitcoin miners can power off. And this is called grid balancing.
If the price is high, the demand is also high. We don't want to use it if someone needs it more than us. If someone needs it more, we're going to give it to them.
It's all part of grid stability, which is more and more in demand when renewable energies are being built out more and more. Because renewable energies are not predictable, and nor are they very stable. You've got to have hungry consumers like yourself to lead to more energy production, which leads to more energy abundance, which leads to lower prices, and you keep going round and round like that.
Yeah, that's like the cycle. Yeah.
So maybe we're entering this interesting future where renewable energy build out is supported and bolstered by Bitcoin mining.
And if you don't believe me, well, check out the above video where they're doing just that in remote Kenya. Please share this video with a Bitcoin skeptic and let me know, do you care if Bitcoin miners heat your home?
So that's definitely an interesting perspective that not a lot of people are aware of. But I think this is going to change a lot for Bitcoin and Bitcoin mining. So shout out to Joe Nakamoto, I guess this guy's name is. We'll keep pushing. It was actually a pretty informational video. Bitcoin is perfectly following the 2223 price movement. Steak and Shake says its sales have risen drastically since they started accepting Bitcoin. And as this word gets out, I'm sure more and more people will start picking it up. Coinbase CEO says the U.S. government could eventually hold over $1 trillion in Bitcoin reserves. The shift is already underway.
But I think it's clear at this point that, Bitcoin is a better form of money than gold. It is provably scarce, just like gold, but it's more portable and divisible. So you can actually use it. Has higher utility, I would say. And it was the best performing asset of the last 10 years. And so for store of value, I think it's going to be important for governments to hold this over time. It might start with being 1% of their reserves, but I think over time it'll come to be equal to or greater than gold reserves.
Okay, great. Well, let's go to the next question. Let's go to the lady over there.
But I think it's clear at this point that,
So that is interesting as well. If he thinks that the reserves will be deep in a Bitcoin. Bullish. Eric Trump says every major bank will adopt Bitcoin and cryptocurrency.
Crypto, had we not been debanked
and we knew this already as well.
But the reality is the banking system in this country is absolutely antiquated. It doesn't work. It's costly. It's slow as hell. I would have never been in crypto had we not been debanked and deplatformed by absolutely everyone. If I wasn't getting the letters from Capital One saying, congratulations, 300 of your accounts are gone overnight, believe me, I wouldn't have found this industry. But this industry that within a year, everybody's going to be in. And when I say everybody, I mean everybody, every bank, every consumer, because this is just the way of the future. And it's an honor to be part of it. And frankly, I'm glad my father's leading the way on it, because otherwise one of the other countries would get it. And I'm glad I'm glad I look at the 401ks and I see how much they've gone up. And I'm glad I look at inflation and see how much it's gone down. I'm glad interest rates are going to come down. I mean, we're getting our country back. But the reality is the banking system in this country,
slowly but surely. But the problem is we need the Clarity Act to pass before we get ran off by other countries. Bitcoin's preparing for massive dump to 42K in 10 days. The bull trap is finally over. We're now perfectly mirroring the 2022 bear market. Are you actually prepared for what comes next? If it does drop to 42K, I'm buying as much as I get my hands on. Bitcoin isn't done. There are 2 mega events to date, which may properly indicate as clearly marked. Next bottom will be the 3rd mega wave to buy. Then be patient. So they actually show us when the next bottom is. It just says 2026. Interesting. But there is seeming to be a lot more on the wave down. Strategies confident in the balance sheet, even at 8K. Strategy said a decline in Bitcoin's price to 8K would not threaten its financial stability as assets remain sufficient to cover its debt. This is hidden opportunities emerge as the Bitcoin trends murky waters. So this is the actual article on what's up with all these weird pop-ups. Hidden opportunities emerge as Bitcoin treads murky waters. The cryptocurrency market hovers under a cloud of apprehension, with Bitcoin struggling to maintain its footing above the critical 68K mark. Where are we now? And we're at 68K actually. Investors feel a turbulent period ahead as several major developments signal increased volatility on the horizon. Many traders are opting for caution, anticipating a potential turning point in the crypto market. While market panic rises, some market watchers point to a rare optimistic signal as the geopolitical instability and economic uncertainties shake investors' confidence. Risk-averse spikes, notably concerning ongoing tensions with Iran. However, on-chain mind perceives that the dip in the fear and greed as an opportunity rather than a cause for alarm. Extreme greed reading has historically indicated a pivotal point for Bitcoin prices. However, the past serves as a warning, as demonstrated in 2022, what a brief rally collapsed despite the stable index signals, highlighting the potential for a swift market shifts. What critical levels are key for Bitcoin's trajectory? According to Quentin, another figure in the crypto sphere, Bitcoin's path towards forward might surprise. He cites on-chain data, identifies 54K as a potential target due to the breach of the 68K threshold. If prices descend to the marker, only those with long-term belief in Bitcoin might remain engaged. Looking at specific figures, short-term investors' anxiety peaks at 90K, while 85K range sees a pullback from bearish traders, a descent to 79K, and a perceived market adjustment with 54K testing the resolve and invested long-term holders. The crypto market feels the strain of external pressures and fluctuating sentiment, despite some indicators hinting at buying potentials. And the prevailing sentiment demand proceeds, especially as Bitcoin negotiates its support and resistance territories. With global tension affecting the market mood, Bitcoin's current levels might indicate buying opportunities. Key price points like 90K and 54K could signal a pivotal movement for investor action. Long-term holders may find renewed faith as Bitcoin tests critical thresholds. As events unfold, shareholders are closely monitoring how Bitcoin navigates these crucial points. Whether Bitcoin stabilizes or encounters a further downward pressure will shape the future for day traders and crypto advocates alike. Back over to X. Let me know what you guys think. Do you think the Bitcoin murky waters is a buying opportunity, or is it something to wait on? And this is XRP. So let's go over to this video from Zach, not financial advice. Major crypto news. February 20 will be critical for the crypto market. February 20 is 4 days from now. I think that is Friday. Let's see. Friday, yeah, definitely Friday. Let's see what's going on.
Crucial decision that is coming down ahead of the United States.
What up? I bet with the GOAT crypto Caspa stream. This is actually a Bitcoin stream. But are you asking for a Caspa stream? You want a Caspa stream tonight? Let me know in the comments. You get 5 people. You get 5 people to say Caspa. We're Caspa streaming tonight. And don't forget, there will be a Zebek stream coming tonight as well. This is just from Bitcoin. A lot of people ask me about Bitcoin, so we're talking about Bitcoin. So I got the Bitcoin hat on. We are live, trying to calm investors down and keep the sentiment there.
It's Supreme Court tariff decision, and the crypto market, of course, reacted to anything tariffs over the past several months. And going back into April of last year, we had a massive drawdown in crypto and in stocks. And then obviously what happened on 10/10, with tariff talk. I don't know how much that was directly tied to tariffs, or maybe there was some manipulation. Who knows, right? But the moral of the story is anything tariffs right now is impacting the cryptocurrency market in a big way. And we're going to dive into exactly what's upcoming here and how the cryptocurrency market could react ahead of this United States Supreme Court decision coming up later this week. February 20th, by the way, right around the corner. That is Friday this week. So leading up to that this week is going to be crucial. And as we get going here on the video, make sure you give the video a thumbs up. Subscribe down below if you haven't already. We're on our way to 1 million subscribers here on the YouTube channel. About half of the people who watch this channel regularly, they forget to click the subscribe button. It really does help us out. It's totally free, and it really does mean a lot to me as we roll along on this channel and continue to give you guys the best updates in the market. So let's get into the storyline. The crypto market, they could be heading into a potentially volatile week as investors brace for the United States Supreme Court tariff decision scheduled for Friday. So crypto markets, again, bracing for volatility here with this decision upcoming. The total crypto market cap remains below its 50-day and 200-day simple moving averages, signaling a corrective structure, while RSI suggests selling pressure is easing. So kind of mixed signals right now in the market. On one hand, you've seen us come up from the bottom. Bitcoin here at 68,000 and some change. We did get as high as about 71,000 as we take a look at some of the top assets here over on CoinGlass. Ethereum just sitting below 2K, Solana under 85, XRP under 150. And we are seeing a little bit of momentum pick up over this past weekend, but we quickly gave it back yesterday. And we head into the week now with this as the main storyline moving forward. The total crypto market cap, again, remains below that 50 and 200 day. A weakening US dollar index could support a short-term capital rebound, with Bitcoin showing relative resilience and Ethereum more sensitive to the macro shifts. Now, this ruling that we're awaiting on Friday could determine the legality or scope of contested trade measures, a development that may ripple across equities, commodities, and the cryptocurrency market. Tariff decisions tend to influence broader macro sentiment rather than crypto directly. We've seen it impact all markets. In the past episodes of trade tension, markets initially reacted with a risk-off tone, strengthening the United States dollar and pressuring equities and digital assets. So, will the Chinese New Year trigger a Bitcoin sell-off? That is something else to be watching out close for here. That is coming up tomorrow. Crypto has historically responded in two phases: an immediate liquidity-driven pullback alongside other risk assets, followed by a divergence when investors rotate toward alternative stores of value. During earlier trade escalators, Bitcoin fell in tandem with stocks before stabilizing as the dollar strength faded. And with markets already fragile after a volatile start to February, the February 20th ruling could act as a catalyst rather than a standalone trigger. So from a technical standpoint, the overall crypto market cap sits near 2.32 trillion after a sharp early February decline. Remember, on February 5th, we saw a massive sell-off. The daily RSI is hovering in the mid-30s right now, which shows us that assets are oversold, recovering from near oversold territory, suggesting selling pressures easing, but the momentum still remains weak. We did have a volume spike over the weekend on a couple assets. XRP saw a nice volume spike, Pepe, Dogecoin, but Bitcoin and Ethereum, not so much. Now, more notably, the total remains below its 50-day SMA, around 2.82 trillion, and the 200-day, again, SMA is near 3.37 trillion. This indicates the broader structure is still corrective. Unless price reclaims the 50-day average, rallies may face resistance near the 2.6, $2.8 trillion zone. In contrast, the US dollar index trading around 97, below its 50 and 200 day as well. Bitcoin and ETH, this is going to be critical to watch to see how these assets perform this week leading up to the big decision on Friday. Ethereum is stabilizing somewhere around that 2K range right now, so that's good to see. Would love to see an Ethereum breakout at this point. That can really charge up the altcoin market. But all eyes now on the United States Supreme Court tariff decision coming up on Friday. We'll be here every step of the way, giving you guys all the news and information you need. And if you guys do want to come over and trade with us, we're trading this market right now, more so than we do in a bull run. And I'm making all my trades with leverage over on BidFi. I usually only take about 10x leverage plays. I'm also taking some spot trades as well. But BidFi is our home for making these plays. And so if you're a crypto whale, a big time trader, you want to come over and get the absolute best perks you can find in all of crypto, sign up using my link and get access now to BidFi. I appreciate you guys for watching. We'll see you guys in the next video. Take care.
So shout out to Zach for that update about the tariff news coming Friday. This is Crypto Insider. Let's see what he has to say. Actually, let's play this one and then go back.
Landed on the moon show. Bitcoin is right now hanging by a thread. This is a huge warning to everyone who is holding Bitcoin or is right now in a Bitcoin position. So let me go straight into the very important to talk about. Massive previous resistance is now turning into support. If we fall below this support, the next big point for Bitcoin would be actually all the way down at $30,000. So the question is, are we going to go down to 30,000? Because if we go down to 30,000, that changes everything. That basically, in my opinion, means that, you know, we're going to have to take a long time to recover from that. And the bear market would be much more deeper than I previously thought. And also that would mean that altcoins would probably go down another 80% from here, which would be absolutely crazy because altcoins are already down like 90%, 95%. If you look at coin market cap, you can find many altcoins that are down 99%. Like we're basically like all value is destroyed from all-time highs. That's crazy. So if we go down to 30K here, it would just put the final nail in the coffin for altcoins. So hopefully that doesn't happen. And I will tell you in this video why I think that is not going to happen. So let me now go through this. So first of all, if you go here on the weekly time frame, Bitcoin did form, remember this huge bearish divergence. That was of course a great sign that Bitcoin is likely to come down here, which has happened. And I think this bearish divergence has already played out. I don't think we necessarily have to go lower right now, but this move here was quite obvious considering this bearish divergence that you can see in the chart on the weekly. But going now over on the back to the daily time frame, looking at the RSI, we did have this very, very interesting line here, because this line was never broken in the RSI. You can see that every single top we got here, we got rejected, right? Right there, 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 there. You can see, right? Very interesting. Very interesting indeed. So, you know, the signs were always there that we are basically topping out in this market. And right now, I want to tell you why I think this is the bottom. I already told you guys, like I made a tweet at the very bottom, exactly when Bitcoin hit 60K, I made a tweet saying this is the bottom. As of now, that is still the bottom. And I still have my $2 million position open. As you can see here, $2 million position open, $100,000 in profits right now. If you want to open up a position, you can do that also right now. Of course, there is risk involved, but I'll tell you why I open up this position. So on the daily time frame, we have massive oversold territory, 15 on the RSI. That is absolutely crazy. Those levels are very, very rare to see. Last time we saw that, or even close to it, was actually here 18, and that was the bottom of that move, and then we went straight up. So I really do believe that this is the bottom. We have seen a very oversold point, which is good to see, because when you've seen oversold, that's when we can go back into overbought, which of course would be a great time to sell. The interesting thing is that in this bull market, we never really saw a very, very overbought territory. We saw 86 there, we saw 83, but that's not really too crazy. Like the top of the bull market here on the RSI on the daily, it wasn't even overbought. Look, it was basically on the very border of overbought. Overbought is above 70, and we had 70.8. That's not so crazy. Overbought would be up at 100. That would be crazy, like even above 100. You know, here we're extremely oversold. So I just think that it doesn't make sense for us to go lower now, because we don't deserve it. In this bull market, we never had peak euphoria. So the fact that we even have peak fear right now just tells me that we're going to get a massive rebound. I think we can go to 100K within a few weeks. I know that right now that doesn't sound like a very possible scenario, but I'm telling you, I'm looking at this, it really looks like that's a possible scenario. Massive support right now, extremely oversold. It just makes sense from that point of view. So that's why I have this open position right now. And if I were you guys, I would also buy Bitcoin right now, because if you buy at oversold, you're always over time making very good money from that. And I think you should definitely go right now to the Moon Show, this channel, and subscribe. And if you want to open up a position right now, these are the exchanges I am currently recommending. So if you want to open up a position on Blowfin, you can click this link down below, and then you can register to get a free $45 and VIP status. So if you go from another, of course, are down below. Let's go back to the price now, because everyone wants to know where is the next price target. So I have a big position open, and like I said, like if you want to open up a position like this, I still think it is possible. I think it looks like Bitcoin is about to make a bottom here. You can see that we're losing bearish momentum, and I think we're going to start seeing this very soon. So opening up positions here, I really think makes a lot of sense. That's why if you make your deposit today, you can actually open up the same position that I am doing right now. And where am I expected to take profits? Well, so opening position at support is great, and then we want to exit at resistance. So where's the biggest resistance? Well, it's actually up here at $92,000 approximately. So if we can get back to 92,000 within a few weeks, then I will definitely take a little bit of profits there, because it is very likely that we go up there, get rejected, and then we do a bit of ranging here. I think it's very likely that during 2026, we might range within these two bands for a few months, and maybe towards the end of the year, we might hopefully start breaking out above. And I think that when we do break above 92K, that's when we know that the bull market is back. So as of now, the bull market is definitely not back, but this is the range, 70K, 92K. Here is a fantastic time to be accumulating Bitcoin at spot, or longing support, shorting resistance. Longing support, shorting resistance. I think that is going to be a great opportunity for us. And for that, if you want to do that with leverage, then you need an account on Blowfin or Coinflare or Weeks. So link them below, open your accounts, and then we can make money in this bear market. You can also long and short altcoins, which is of course extremely risky. If you want to dabble into altcoins, I would recommend spot, because with spot, you don't get liquidated. On Bitcoin, I am doing always 10x, 20x, sometimes 30x leverage. But altcoins in a bear market, we use spot. In a bull market, we can go leverage with altcoins, and usually we get paid out very well. But in the bear market, that's very dangerous unless you're shorting with leverage. So shorting altcoins, that obviously can make you a lot of money. That's clear. But yeah, and now I want to recommend to you a YouTube channel which is absolutely undervalued right now, if I have to say it myself. Go check it out, Carl Moon Music on YouTube. I make music. I love making.
Why is everybody in crypto trying to put you on a music channel? So this is going back to, who is this? Crypto Insider. This will be the last video, and we'll shut it down for the day. So let me know what you guys think. Do you think it's over for Bitcoin, or is this a good time to buy?
I've been in crypto for more than 12 years. And in those 12 years, I've been a loud advocate for Bitcoin. I give you 100 Rand worth of Bitcoin. Yes. The transaction gets confirmed by these thousands of computers, which are based all around the world, and they get rewarded by giving us Bitcoin. For years, I converted millions of people. Bitcoin is an asset. It's the ultimate store of value, and it's the fastest growing value network in the world. But now, for the first time in 12 years, I'm seriously starting to doubt the thesis. Well, maybe that's exactly the point. Maybe Bitcoin doesn't even have a thesis anymore. When it was founded, Bitcoin was supposed to be a digital cash. It was a peer-to-peer electronic cash system, one that was decentralized, one where people could own their own money and move it around as they wish. That was the North Star. That was literally the first line in Satoshi's white paper. But Bitcoin isn't cash. It's too slow and too expensive to be cash. Also, why would anyone use cash where every time you pay, everyone can literally see every transaction that you've ever made and your account balance? Bitcoin definitely isn't cash. And in 2017, when people realized this, and when the Bitcoin community agreed not to change the block sizes, that was the end of the peer-to-peer cash narrative. But then the market found a new narrative. Bitcoin was a store of value.
Back 5 years ago plus, there was talks about, using it as a means of buying things. Now it's more about the store of value and the way, perhaps hedge against inflation in various currencies. What do you see as the real value and the reason why the United States government should be paying so much attention to it?
First of all, you got Bitcoin. It was the first digital currency, and it's the original. It's the strongest one. It's been around for over a dozen years now. No one's ever hacked it. No one's ever cracked the security around it. And so it is an excellent store of value.
It was the most mathematically limited, practical store of value in the world. It was like gold, but better. You mined it using energy. It had real limited supply. It was easy to move. It was easy to divide. It was gold 2.0. And soon, everyone would see this. In fact, they had already. The only problem is that they couldn't buy it because the big players like the pensions and the sovereigns and the endowments, they just had no way to access it.
A lot of people want to get Bitcoin, but it's difficult because you have to go to exchanges that are overseas in a lot of different ways. But a Bitcoin is basically, it's digital currency, it's a store of value, and effectively there's a public ledger that records the ownership of coins.
It was the ultimate opportunity. You could buy the asset that was about to become the world's reserve store of value way before the institutions. And then one day, on the big day when the ETF would get approved, you could sell it to the institutions and you could get rich. It was the ultimate no-brainer. What a killer narrative. And what a fight. That's a fight that we all rallied around. A fight to get an asset outside the system into the system. That was something we could all unite about. I mean, we don't all agree on many things, but the one thing we do agree on is that the system sucks. And what sucks more is that the system controls the money. And now we could fight them. We could fight for them to give us the right to hold our own assets. And we did. And we rallied. And we shared. And we fought. And we huddled. And we encouraged each other. We didn't agree on many things, but the one thing we did agree on is that we all hated the system. We were united. Iranians, Americans, Venezuelans, Israelis. We were united. We had the ultimate store of value asset. We bought it first. And now we were fighting for the system to adopt it. But then the ETF got approved.
Well, a milestone moment for Bitcoin. Regulators have given money managers the approval to launch 11 spot Bitcoin exchange-traded funds. Now, everyday investors can get exposure to the world's largest cryptocurrency without having to own it.
And Bitcoin was finally in the system. This magic store of value was finally accessible for everyone to buy. You could buy it in your brokerage account. You could buy it in your IRA. You could even buy it in your bank account. We did it. And at the same time, we finally got a pro-crypto administration. They vowed to change America from being hostile towards crypto to making America the crypto capital of the world.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
They gave us a pro-crypto SEC. They even gave us a president that was all in on crypto. We won. And for a short time, we celebrated the win. But now there was nothing left to fight for because we won. That's it. We don't need to fight the system anymore. Bitcoin is in the system. Bitcoin is the system. And so all that energy, that passion, that power on Twitter, on Reddit, on TV, it's gone. Just like the day after the war when you go outside and there's nothing left. The war's over. And at the same time, the pro-crypto president, he was fighting some wars of his own. Tariffs, trade wars, currency wars. And this was making people scared. So what do? Well, they dumped their dollars and they scrambled for the store of values. But they didn't scramble into Bitcoin. They went to gold, they went to silver, they went to copper, they even went to stocks. But they didn't go into Bitcoin, which is kind of weird because they had access to it. They knew what it was, but they didn't buy it. Store of value. It was such a great narrative. And on paper, it made perfect sense. But in reality, when people got scared, they were too scared to try the new digital store of value. And so they ran for the old faithful gold. And as they did, they proved that gold was the ultimate store of value. And Bitcoin? Well, it wasn't cash. And now it wasn't even a store of value. So what is it? Well, a good place to start would be to ask the OGs, the guys that got us here, the guys that fought the fight. The only problem is, they're not here anymore. They sold their coins. They're gone. No more hodl. No more buy the fucking dip. No more fight. Nothing. So now we have this asset. It's not cash. It fell as a store of value. And well, right now, no one actually knows what it is. Because if it's not cash, and it's not a store of value, and it doesn't even move like the NASDAQ, what the hell is it? Is it a meme coin that investors buy when they have excess capital? That's not a great narrative. And especially when soon we could be hit by this quantum threat.
Think of Willow as essentially like one stable, logical qubit equivalent in a chip. We need about 4,000 to break RSA 2048, and we need about 8,000 to break SHA 256, which is the underlying encryption framework for Bitcoin. So I think you're right. I think we're in the sort of like 2 to 5 year shot clock.
That's an existential threat that can destroy Bitcoin. It's existential. And the developers, well, they're not that invested anymore. There's no more fight. These guys got in early. They don't need the cash anymore. There's no urgency. There's no fight. There's no hunger. And there's no narrative. And right now, the only person buying this asset is this raving lunatic who's taking money from one person to buy Bitcoin and pay yield to another.
Bitcoin's appreciating about 50% a year for the past 5 years. We expect it'll appreciate about 30% a year for the next 20 years. And we offer these credit instruments that pay about 10% dividend yield in the form of a return on capital dividends. And so it's a pretty strong business model. If you want to work out the math, as long as Bitcoin goes up 1.25% a year, the company can pay the dividend forever and create more shareholder value. If Bitcoin stops going up 0% forever, we got about 80 years to figure out what we're going to do about that.
The guy's offering 11% yield on a non-bearing asset to get more money. I mean, if you ask me, it sounds like the ultimate game of hot potato. It sounds like the ultimate legal pyramid scheme. And it's working. I mean, he's already bought nearly 4% of the world reserve asset. But even though he's buying sometimes up to $1 billion a week, not even $1 billion a week can give us a single meaningful pump. Not a single meaningful pump since the 10th of October. And the retail people, the people that fought the good fight, well, they're gone. In fact, we're at the lowest level of retail people in crypto since 2021. Basically, people came here in 2021, they started leaving, and they never, ever came back. So, where does that leave us? Where does it leave Bitcoin and blockchain? Well, at the beginning of this video, I said that for the first time in 12 years, I'm worried. I'm worried about Bitcoin, but I'm not worried about crypto and blockchain. I'm worried about Bitcoin because Bitcoin doesn't have a narrative. And for as long as Bitcoin doesn't have a narrative or a use case, well, there's no reason to buy it. Bitcoin is energy. It's not only electric energy, it's also energy on Twitter, it's energy on Reddit, it's energy on TV.
All right, Chamath, we don't have that much time left. Let's talk rocket ships. First, Bitcoin, 39,000. Where's it going?
I mean, can you play the clip in 2012 and 13 when it was at 200 and everybody was laughing at me on CNBC every time I would talk about Bitcoin? Where is it going? It's probably going to 100, then 150, then 200,000.
And the more people buy it, the more it goes up. And the more it goes up, the more people buy it. And that's the energy. But right now, that energy is spiraling down. And so I think this ends in one of three ways. Firstly, Bitcoin could just die a slow death. If it isn't a store of value, if it isn't digital cash, if it doesn't have earnings, then Bitcoin's effectively just a big meme coin. And if it's a meme coin, then it will suffer the same fate as all the other meme coins. If Bitcoin is reliant on investor energy and there's no energy, then this is what happens. Just look at the chart. That's the first option. The second option is that Bitcoin is a store of value, but in this cycle, it didn't act as a store of value. And that's not uncommon. I mean, even gold has had multiple cycles where it didn't act like a store of value, right? Institutions have literally had access to Bitcoin for 1 year. And maybe 1 year just isn't enough time to make it a store of value. If this is the case, then Bitcoin has a great future. The only thing is that that future isn't in this cycle. And it'll only work if the price finally recovers. Lastly, and most unlikely, is that Bitcoin becomes the de facto currency of AI agents. Let me explain to you what I mean. We're about to move into a world where millions and maybe billions of AI agents will be operating this new global digital economy.
It's very clear soon each of us going to have hundreds or thousands or millions of agents working for us in the background. And they will be transacting. They will be moving money around.
These AI agents will be autonomous, and they'll be doing trillions of microtransactions every single day. Trillions of transactions. In fact, I think we can't even begin to fathom the number of agents and the number of transactions that this economy will see. I think trying to imagine the number of transactions would be like the people using coal trying to imagine the difference electricity would make to the world.
But also what agents will do is they'll transact at a transaction volume and at a rate. Yeah, it'll make the traditional networks head spin.
Exactly. They're just not going to be able to support it.
Yeah.
Right. And also even stuff like investments or trading, right? So today, you open the Binance app, you look at a chart, you have to click on a price level and you have to type in the price on a green or red button. That shouldn't be the interface. The interface should be like, hey, look, convert 10% of my stable coins into BNB. And then you'll figure out, okay, if you have a large position, you'll do it slowly over time. If you have a small position, which would be one market order, all of that stuff should be just happening in the background. All right. So the agent can do this for us. Soon you will be able to.
And all these transactions, well, I don't know if they're all going to happen in US dollars. The digital economy needs to be global, right? And so now there's a race between the dollar and Bitcoin to become the currency that AI agents use. Listen, it's a long shot because most agents won't operate on the Bitcoin blockchain. But agents will need a currency to transact in. So it's either going to be the dollar or it's going to be Bitcoin. And that brings me to the next part of my thesis. At the beginning of this video, I told you I was worried about Bitcoin, but I was mega bullish about the crypto industry. And this is exactly why. AI agents will be the new digital global economy. Very soon, we will each have millions and maybe billions of agents doing work for us 24/7, 365. I don't even think that we can begin to imagine the quantums, the number of agents and the number of transactions that are about to take place. When these agents make transactions, they're not going to be using credit cards. They're not going to be using PayPal. And so the only type of currency that these agents can use is crypto. Remember, these agents are going to need immediate settlement without a third party. The agents are going to need wallets. They're going to need exchanges. They may even be tokenized. And all these rails, well, all these rails are going to work on blockchain. So even in the worst case, even in the case that Bitcoin doesn't work, and in the most unlikely case that Bitcoin actually goes to zero, I think that Bitcoin and crypto will be the rails for the new agent economy. And that's bigger than anything that we can imagine. I mean, just imagine trillions of AI agents doing trillions of transactions every single day, 24/7, 365. So what happens next? Hopefully Bitcoin has a pump. And if it does, the shorts will start to get squeezed. And as the shorts start to get squeezed, the price goes higher. When the price goes higher, we get more FOMO. And ultimately, the green candle restores everyone's faith and Bitcoin becomes the ultimate store of value in the world. Actually, that's my base case. Been here for long enough to know that one green candle changes everything. But what if this doesn't happen? And what if Bitcoin does lead a slow death? Well, then I'll say that Bitcoin will always be remembered as the technology that created this amazing industry. Just like when you think about Nokia or Ericsson, and you remember the impact they made on mobile phones, but they're no longer here today. But we all use a phone and we all do transactions, and nearly every transaction happens on a phone. Those two giants failed, but the tech inside those phones changed the world. If this scenario plays out, it's going to be a painful time for crypto. And while Bitcoin goes down, all the altcoins will suffer. But eventually, some of the altcoins will capture this AI agent economy. And when they do, they'll start to break the trend. And even though Bitcoin may bleed to death, these blockchains may emerge with real use cases and real revenue models. And if this happens, it could be a new chapter for the industry. One where not every move is determined by the moves of one single token that has a 60% market share. We may move into a market that's healthier, more dispersed, and actually more transaction-based. Look, My base case is that we get that Bitcoin pump. And when we get that Bitcoin pump, then I think everyone forgives Bitcoin and Bitcoin becomes the ultimate store of value. But even if we don't, even if by some crazy thing, Bitcoin actually finally fails, well, then I'm as bullish as ever about crypto. Let me know what you think of my thesis. I know this video was a little bit controversial, but I had to tell you exactly what I was thinking. And I can't wait to get into a world where AI agents are doing millions and maybe trillions of transactions, all using the blockchains that I've bought. And guys, speaking of transactions, I want to remind you of something. The best transactions that I make are on my Solid Gold Cost Card. For those of you who don't know what this is, it's a credit card where I link a crypto wallet and I spend from a crypto wallet in real world use cases. The best thing is that when I do, I get up to 8% of my money back immediately. Now, I mentioned to you guys that I'm flying to the US, to Mar-a-Lago, and that I used my cost card to buy the ticket. I spent like $5,500 on the card, and I got $400 or just under $400 back in an immediate reward. This is one of the big use cases in crypto. So if you want a cost card, if you want a Solid Gold cost card, sign up using the link below, and I will give, how many should I give? Let me give like 3 people Solid Gold cards. These are real Solid Gold cards, and they cost like $5,000 a card. So sign up using the link below, and as soon as I'm back from the US, I'll give away, did I say 3 or 5?
So shout out to Crypto Insider, Crypto Banter, and that analysis and in-depth thesis. But let me know what you guys think about that. But your main man BTM signing out, and Bitcoin isn't dead. They're just scared. But let me know in the comments, and we will try to get a Zebek video up live stream soon, and probably a Caspa later tonight as well. So let me know what you guys think. Either way, and as always, it's your main man BTM signing out. Thanks for joining. Don't forget to sign up for the BTM Crypto News Network to stay current on news and events. And as always, let's get back to the money, guys, and stay dangerous. Miners out.